Okay, let's talk to Ladi Bello for this fourth trading day of the week. Ladi Bello is a fixed income dealer at Access Bank. He's joining us from by Skype from FMDQ Exchange Place. Thank you so much, Ladi. It's good to see you again.
Thank you, Boston, for having me.
Great. We appreciate that. So let's get a sense of where we are. Today is the maturity repayment date of some treasuries by the central bank. What's the size of what we're looking at maturing today? And if you add that to the market open size in terms of liquidity, what figure do you have on paper?
So estimated market liquidity closing yesterday was around 179 billion naira. We have a maturity, almost maturity today of about 311 billion. So cumulatively, that's a total of about 470 billion inflowing to the system as at today. So we expect the CBN to intervene in the market to mop up the excess liquidity in the system by floating an OMO auction, as they have done in the preceding weeks.
Once you have that open market auction, open market operations auctions, what does that do to the liquidity in the system? How will it play
essentially what this does is to take out the liquidity in the system. Typically, when there's excess funds, the way the CBN uses the OMO auction as a monetary policy tool to manage the liquidity in the system. So what we've seen over the last couple of weeks is when there's a perceived or when there actually is excess liquidity in the system, we see the CBN coming into the market to intervene, float an OMO auction, and mopping up this excess liquidity in the system. Stop rates at the auction has hovered around the 13 handle on the long end of the curve. That's the 1-year OMO maturity. Stop rates for the last auction was about 13.09%, coming from 13.11%. So we're seeing the CBN try and manage rates above the 13 mark.
And what will happen to the yield curve? What happens?
So what we've seen over the last couple of days is a sell-off on the short and medium-tenured maturity. So we're seeing a bit of an anomaly here, an inverted yield curve, whereby the short and medium-tenured securities are trading at levels significantly above the long end of the curve. So the short-tenured February and March bills are traded as high as 13.8% levels this week, whereas there's still a bit of demand in the secondary markets on the long-ended bills at that 12.6% mark.
So how are you folks at Access Bank preparing for this liquidity surge in the markets between now and the next week? Around this time next week is going to be a lot of liquidity showers. So how are you folks prepping for that? Would that have impact significantly on either of the two treasury bills window, the NTB and the OMO?
That's very correct. So we're seeing a bond maturity on the 13th of February 2020. This is about 606 billion. So there will be excess liquidity in the system. So typically, when this happens and when there's such anticipated liquidity in the system, we'll see counterparties come in to buy both bonds and treasury bills, mostly on the OMO side due to the restrictions on the NT bills by local corporates and retail investors. So we're definitely going to see a bit of a bullish run in the next coming days. In the month of February, we have an outstanding OMO maturity of about 2 trillion, but this would gradually thin out as we approach March up until the end of the third quarter of the year. So we also have coupon payments on the bonds, the 2028 bond, estimated about 50 billion. So generally speaking, the next couple of days, we expect a high level or heightened level of liquidity in the system, and as such, it's a buy market that's expected. So we're expecting to see a little bit of position taking, exposure of bids on the medium to long end of the curve.
So how does the savings bond and the February bond auction by the DMO, which will be in about 2 weeks from now, how much of that, of the liquidity outlook, do you think these two primary market program of the debt office will do?
So typically speaking, we have the bond auction being floated in the third week of the month, and we're seeing an average of about 145 billion being floated. over the last couple of auctions, we've seen an oversubscription, which is generally skewed towards the long end of the curve, which is the 2049, which is currently trading at about 12.45 on the bid and 12.35 or 32% on the offer. So generally speaking, given the tight level of liquidity that we've had over the last couple of days, we've seen a bit of a retracement in the yield, but we're definitely going to see some level of anticipated buying on this instrument ahead of the auction, and an oversubscription on this instrument at the auction, since it's the highest trading bond in the market, which provides the longest duration as well.
Do you see, what's your outlook when you look at OMO and OMO treasury bills in terms of retracing or repricing that would overtake inflation, at least at a measure that investors could say, look, I have a real return on my investment?
Right. So as we stand now, the OMO bills in the markets are trading about around the 12.6% handle, like I mentioned earlier. The OMO auctions, if you win, if you're successful, you're getting it at around 13.09, which is effectively a yield hovering around that 15% mark. As it stands, the real returns you're getting are positive, about 300 basis points when compared to the inflation of about 11.98, which was released last week for the month of January. So we expect to see continued buying on the long end up until the point whereby the real returns are thinning out and maybe even entering negative territory, which it is on the NTB side of the curve.
Okay, that's very interesting how the market is looking right now. Thank you so much, Ladi Bello, fixed income dealer at Access Bank. We appreciate you coming through from the studios at FMDQ Exchange Place. Okay, let's check in with our closing numbers for the third trading day of the week. You heard the news. Emerging and frontier markets took a beating from global investors trying to get some gains in the coronavirus scare. So we lost 1.19% at the stock exchange here yesterday. Just looking at the numbers. Okay, we the doorsteps of 27,000. That's 1.2% there for you. And the equity cap also sank further on Wednesday. A very disappointing trading day. But how did we arrive at that? Look at the primary markets data. That's a bit consistent with our daily average. But if you check through the 5 main sectors that we track for you on the daily basis, you get a different picture. So despite the 1.2% decline in the headline index for the Nigerian Stock Exchange, the banking and their cousins, the insurance, made about a 2% plus if you put that as a tally. So the banking 1.46 and the insurance 0.63%. Again, the earnings from these two sectors are on the street. We heard about Jaiz Bank, the non-interest bearing lender reporting better than expected numbers, and a few of the banks like Fidelity and Sterling Bank reporting good numbers, and a few of them, others like Union Bank, giving notice of their numbers. So when you see these numbers coming, our investors begin to step back into frontier markets like Nigeria. Again, the scare around coronavirus going out a little bit or declining, and global stocks are making a strong comeback. The consumer goods and industrial goods gave the Nigerian market a bloody nose on Wednesday, 1.37 and 1.63. The oil and gas went down the most. That's a negative 2.19%. Checking the oil and gas, folks, as you may have already heard earlier, their earnings for 2019 was largely in the water. Corn oil, despite outpacing the rest of the numbers we've seen so far, went into negative territory. All of that you can see there. And we spoke about the Treasury bills and the Naira bond market earlier. You can see the numbers in just about a second. I beg your pardon, just to wrap it all up for you. So let's leave it there for today. And let's go for a Friday tomorrow, the 7th of February. I am Bosi Namafa. See you then, and have a great day, everyone.